You are listening to ChartingWealth.com for Friday, the 12th of June, 2015. We are looking at IYY. We always go through three market indexes and gold, and we always start with the total market. The total market, for those of you listening on audio, you would, if you're seeing the video, which we can always find at ChartingWealth.com, you can see that the market started going down, the total market, on the 22nd of May. It tracked all the way down and is still in officially a down move. We've not broken through our two-day trend line on our two-day chart. We are getting awfully close to doing so, but the bears have pushed the attempts by the bulls to push the market up further. We currently have a crossing going down on our MACD. As you know, those of you who listen every day, we love the MACD. It is a great indicator, helps us a great deal in tracking the convergence and the divergence of the moving averages. That's what it is. Actually uses exponential moving averages because they more closely track what's been happening lately as far as price action goes. Love the MACD. Well, it crossed over going down between the 28th of May and the 1st of June and has moved down since then. In fact, the derivative oscillator, which we casually look at, we don't really use it except to sort of confirm and make us feel better about things happening with the MACD. It continued to accelerate. It looks like it got a little bit longer today. The MACD did converge a little bit. That means the two lines, the exponential moving average 8 line, which is our signal line, it is actually moving closer to our MACD, which means we're having a convergence, and until they cross, we are still in a down move. And we also feel a little better about where things are going slowly in the market in that we don't have a total violation of our two-day trend line, at least on our two-day chart. Now, if we drop back to the 4-hour chart, we do see that the trend line has been violated, and we see 1, 2, 3, 4, 5 half-day candles, so 2.5 days of upward movement. Crossed over going up between the 10th and the 11th, actually the afternoon of the 10th. And we have the derivative oscillator going up, and we have the MACD going up. But again, that is the short 4-hour chart. However, when we look at how accurate the 4-hour chart has been over the last several changeovers, it's been pretty good. We look back, as we did yesterday, between the 27th and 28th of April. We get on in when it crossed over going down, tracked that very nicely, crossed back over going up on the 8th of May, tracked that very nicely, crossed over going down on the 26th or so of May, and that tracked that nicely, and now it has crossed over going up, and if you had gotten in, you would be doing all right now on the 4-hour chart. However, it can get more dangerous because it is much more subject to swings than the two-day chart is. If we drop back and look at our two-day chart, we can tell that it has gotten sluggish, particularly as we have gotten into the bad time of trading for the year, as we talk about. This is the time of year that, of course, the markets tend to many times swing sideways because a lot of volume is out of the market. That's one reason we love to use our trend lines to help us in our trading. So that is where we are in the total market. Now let's go to the S&P 500. It typically tracks very similarly the total market because it's 500 of the big stocks, so it's a large chunk of the market. What do we see going on there? About the same thing. It does look like the S&P 500's so it really is more pushing through. It's pushed through our two-day trend line on the two-day chart. Not a good sign for the continued down movement, but the MACD tells us that that is still the situation. So when we track back to our 4-hour chart just to see what's happening, we can see that it has broken through, very similar to the IYY, 5 half-day candles, 2.5 days of up movement, crossing over between the 10th and the 11th, actually again the afternoon of the 10th. We see with the SPY, and this is something that I think means a lot, when we have the MACD crossing at about the same time that the derivative oscillator pops over. That usually is a good sign that the track is going to be more accurate and last longer. We can see that occurring back on the 8th of May and sorry, January, February, March, yeah, 8th of May, and also when the market switched over moving up, and also on the 22nd and the morning, I guess, of the 26th or so, 25th, when the market moved over going down, we saw derivative oscillator very accurately flip over too. So when that happens, it makes us feel that the move's a little more bold. So we do have a violation of the 2-day trend line, and we have a good crossing going up. So again, as we talked about yesterday, we are somewhat schizophrenic on both the IYY and the S&P 500 because the 4-day chart is showing a nice clean crossover, but that's not yet reflected in the 2-day chart. However, once we start seeing our 2-day trend line being violated and the derivative oscillator flipping at the same time, it makes us feel better about a real change in the movement. Now we're going back to the 2-day chart, and we're going to switch over to my favorite chart to track, which is the Qs. And look at the Qs. It switched over going down between the 3rd and the 5th. We can see that we have a trend line that's been drawn. It has not been violated. We have on the Qs right now what we call a Doji. A Doji is a Japanese term that the rice traders used for great indecision. We have the bulls and the bears in a standoff. We have what's a cross, as you'll hear this called many times as far as candlestick trading goes. It means great indecision. We do have the derivative oscillator continuing to heat up, and the divergence is still quite great in the 2-day chart. But let's switch over to the half-day or 4-hour chart and see what we see. Well, we see actually the pushing through and then coming back into and under, attempting to come under the 2-day trend line. We have a crossover as of, I guess, the morning of Thursday, the 11th of June. We have the derivative oscillator, however, crossing at about the same time that the 4-hour MACD crossed over. That's usually a strong indicator. But then we have a leveling off in the afternoon of Thursday the 11th of the price movement. So the Qs is not as schizophrenic in that the 4-hour chart does say up movement, but it is not as confirmed as the up movement of the 4-hour charts on the total market and the SPY. Again, all of our big charts are still in a down movement, and we have not had those cross over yet. So that is where we stand on our 3 indexes. Now let's go back to the 2-day chart, and lastly take a look at gold. Gold was technically down for the day, almost a 0.5%, 0.46%. Gold crossed over on the big chart going down between the 26th and the 28th. It has for the last 2 days shown us green candles going up. It has not crossed over on the MACD yet. It is converging somewhat, which means it could be getting to a crossing in the future. Derivative oscillators lost a little bit of its speed, and we do say on our 2-day trend line, we do have the 2-day candle crossing that, violating our 2-day trend line. Now let's look at the 4-hour chart and see what we see. Well, the 4-hour chart crossed over back in the early morning hours of the 10th of June. It then has not gone any higher than it went by 12 p.m. on the 10th of June. It has actually rolled back from that. The derivative oscillator gained speed back at 12 p.m. on the 11th, but then lost some steam on the 11th in the afternoon, and it actually opened lower than it closed. No, it opened a little higher than it closed in the morning, but for the day it was down 0.5%. So again, the derivative oscillator has has continued to lose, has started to lose a little bit of steam. MACD has crossed over going up on the 4-hour chart, but we are technically in gold, still in a down trend, but we do have our trend line violated. So we'll continue to keep an eye on those things. The markets, of course, right now are choppy after all of the up movement in the indexes and the down movement in gold. We will see what Friday has in store for us. We appreciate you listening. Please let us hear from you. We love to hear what your comments, concerns, and needs are. Chartingwealth.com. We wish you the best in trading on Friday. And don't forget, we will be recording our Monday show after the markets close. Plus, we'll be recording our weekly review and forecast. All of those will be posted at chartingwealth.com, at our website, also on Facebook and Twitter. Please be sure to follow us everywhere you can. God bless. Wish you the best in trading. Here from chartingwealth.com.